So 3, 2, 1, mic test. Yeah, all is well. Perfect. So what's going on, everybody? Stefan here. Welcome back to Trading Review series. It is the 22nd of July, and this is Trading Review number 9. This one is going to be a bit of a strange session because if you were to judge it purely by the result, you'd probably say that it was one of my best trading days since I started documenting my journey here on YouTube. And money-wise, financially, it actually was. I finished the session at plus 1,264 in the account here. But if I'm being honest with myself, I don't really think I traded particularly well. The money was great, but I think the process behind it wasn't that great, in my opinion. However, let's jump into the charts, and I'll walk you through exactly what happened, what I saw, and how I managed the trades, and more importantly, what I don't really want to repeat the way I got this result. Very important. So if you've watched yesterday's review, Nasdaq closed with a very, very bullish candle. And even yesterday, I was looking for shorts, especially when we came into this 50% retracement of this bearish price leg that we put on the last 3 weeks on last 3 days from last week, Wednesday, Thursday, Friday. So I wanted to see at least some shorts. Yesterday we closed above Monday's high, and I finished the trading session somewhere here. It happened that I had a couple of things to do before I went to bed, and I extended my bedtime, and I was basically awake. So I'm gonna start to bar replay this here, and I will show you where I got into the first trade right over here. As we closed with a very bullish day, I still wanted to see a retracement. We took previous day's high. We were trading in through this gap, and we were also above the 50% of this price leg. Obviously, keeping in mind that we are still bullish, but I wanted to see a retracement. However, I was just looking to trade from liquidity pool to liquidity pool. This was the most important thing to me. So when we closed, I looked at this and I said, okay, we are having a bullish gap here. So there is a chance that we are going to react no matter what the next 4-hour candle does. So I'm going to come here and I'm going to start playing the bars. This was, I think, in the first hour. I let the first hour pass and we were trading just here. I'm going to go in 4 hours and show you what I saw. We were trading in this 4-hour gap. So simple. I'm trading a liquidity concept here. We are trading below previous H4 close, below previous H4 candle, and we are trading also into a gap. So all I wanted to see was a signal that I can go long, and this was my signal here. We're having a gap that is being disrespected with a bullish candle. I decided to enter long. I put my stop here and I put my TP, I think it was somewhere here at the top at this high. Now I saw also this gap and I wanted to target this, but I set my TP and I was actually listening to a podcast. I was on my phone, and I managed to pass out while the trade was running. I don't really do this. I'm kind of over managing my trade, so I'm next to my phone while I'm being in the trades, but I've passed out, phone on the bed, and the trade while the trade was unfolding. So I was in here, trade starts going higher, I'm sleeping during this time, and finally, I believe, if I'm not wrong, the trade hits take profit. Let's see, yes, here. So I didn't extend it properly. The trade hits take profit here. I'm not awake at this time. Trade hits take profit. I took a 4 contract size, 4 micro size. So the stop was around what, 20 points, 480 by 20. Hey, contract size was 4 and the stop was 20. That leaves me with about $160, $180 stop loss. But in my rules, it says that I shouldn't open a position, shouldn't be opened with more than 3 contracts on the initial position. So let's have a look here. 1 second. I'm gonna show you what I wanted to say basically is that I have broken my rule. This is my rule and I have broken it. So maximum initial position size is 2. It's actually modified. I modified it to 2 to 3. I remember I modified it, but perhaps I forgot to write it down here. Anyways, I'm sleeping all this time. And I believe we came in Asia. This is where we opened Asia, 20 p.m. New York time. And I woke up right over here. I woke up, I checked my balance. I realized actually my trade went to TP because I was, when you wake up, you don't really know which world you are in. And I didn't know exactly what's happening. However, I got into this trade and I said, okay, I have a cushion now because I made on this trade, I made about what, 272, 312. So 40 points by 8, or about $320 cushion. And I said, okay, I'm going to open at 2 micros here and I'm going to put my stops here at the high because I believe we are not going to go for these highs before we're going lower. So I entered into this trade. I was also looking at how the 15 minutes was looking. I was looking at how the 1 hour was looking. We swept some trend line liquidity, and I'm getting myself into a trade, and I'm having a difficult 1.5 hours staying awake because the moment I enter into a trade, it comes right against me. I think I was in drawdown about almost the whole profit that I've done, $300. I think about $280 I was about here in drawdown. Finally, it comes down. I'm taking a deep breath and I'm saying, okay, it's finally going. Let's see. Coming back up again, down, up, down, up. So basically, we will keep on sweeping liquidity. And sweeping liquidity and grinding a bit higher. Sweeping liquidity, grinding a bit higher. This is the most challenging type of price action when you are looking for a quick delivery. So I was awake all this time. It was 4 in the morning, I think here, or here 1 a.m. It was actually like 7 in the morning here. Where is it? Let's see. I was awake during all this price. I remember at some point I passed out and I woke up when the price was somewhere lower. So we finally managed to break down with a bit more momentum. Yes. And we were approaching London. Yes, we're approaching London. So the risk to reward tool, it's lowered here on the way down, but I actually exited the trade exactly where you see the risk to reward finishing, like on the right hand side in terms of time. I looked and we were in London and we took the slow once. And I saw also that during this time, if you are seeing, this is yesterday's New York session low. This is how it's marked on my chart with green, that green box that you see with this green box here with dashed line, that's New York session low. So I was aware of the fact that we took a big pool of liquidity. I was starting to look at this gap here to see if we were getting it disrespected. And at this point here, I believe, let me have a look quick. Okay, I looked, there was a gap here. We got traded through. I anticipated that this is going to reverse and offset some liquidity. Now, I'm not sure exactly if this is where I stopped the trade, but I took another 2 micros here and I let it run. I let this run for about, I don't know, an hour or something. It was quite messy. Even here you can see gaps up, gaps down, like momentum to both sides. This is not the best delivery that you want to see, but we finally managed. And I believe over here, I think actually here, that's where I finished my trade. Why did I do this? And I want to share something with you that if you stayed until here, I promise you this is going to change your trading. And it's why I'm recommending at least doing your analysis on the futures chart. I'm going to show you this. I'm going to go here and I'm going to go to the old broker. Where is it? 6:50 a.m. Yeah, 6:50 a.m. Let me go on the US 100. And this was 6:50 a.m. I'm still in bar replay mode. Yeah. Mind you, I go in 4 hour here and look what this looks like. It doesn't really say anything. This candle could have literally engulfed back, traded higher, and we could have resumed the bullish structure that we had here. This is, again, capital.com, US 100 cash CFD. This is what you trade when you are trading prop firms. And yes, I know some of them are having the 4 hour structure differently. But look, I want to see you very, very clearly what happens on the futures contract. Look what we're doing here. I'm going to try to remove the drawing so you can see clearly. We're coming. The high of this candle is 29,173. You can see here at the top. Wait, I cannot do it. You can see at the top H, 29,173. Look at the high of this candle, 29,173.5. What we actually did, we traded above the previous 4-hour candle high. Not only that, but we also traded in this gap here. That is a strong, especially when you are having a selling price lag, like a bearish price lag like this. You are expecting at least a reaction. So I'm going to go back on this and show you how the 4-hour looked. There is no 4-hour gap here. The candles are not the same. They are not structured the same. So if I was trading CFDs, I wouldn't have been able to identify that, okay, I want to perhaps take profit there. And why would I have taken profit there? But it's because I'm trading futures, and I came here and I looked at this and I said, hold on a minute. We just traded above previous candles high, and we also traded inside a gap or a fair value gap, like ICT himself likes to name it. So because we traded here, I decided to literally close my trade. I literally closed my trade. I got myself out here when we first tapped the gap. Here, I didn't want to be in the trade anymore. So this secured me, what? 0.73 to 171, 100 points at 2 micros. That's about $400. Plus the $320 in the opening Asia, plus the overnight that I slept through and that I wrestled with in this area here. This was another 239 to 239 to 73. That's about 170 points at 2 micros. This alone was about $600, $700. So altogether, it resulted in the profit that you're seeing. But it was a sequence. If you are seeing, it was a long, which was somewhat, if you want, you can say, okay, you took your first trade, it was with the trend. Because if you look at the 4-hour candles here, we are in a bullish trend. Like it seems like we found a bottom, we swept some liquidity here, and we want to trend higher. I took a long, and my long was very short-lived. It was for a very short 40 points. I woke up here, and I decided to short. I didn't take my entry at the very best moment. The price went sideways. It was tasting my patience before the move. Finally, we delivered. I wake up. I'm in London. I see that the New York low previous days is being taken, and I'm taking a long. So I went from long, short, long. But all I wanted to see from yesterday, if you remember, I was saying I wanted to see a retracement. But in this price leg, when you are trading liquidity and you understand liquidity, you can trade from a pool of liquidity to a pool of liquidity. Is this going to work every day? No, it's not going to work every day, but it's good for you because it helps you to read price action in real time. And it also helps you to understand which trades do I want, which trades are easier for me to spot, where do I trade the best. These are the most important things that you can figure out as a trader. So liquidity giving both, it's a very important thing that I want to say is that if you look here at the trades, look when we took liquidity and I decided to enter in this long, the moment we took New York low and I opened the position, this is the best thing that you can have when you are trading liquidity. You are having a small drawdown, and not only you are having a small drawdown, there is also a catalyst for the price to start with a quick delivery. It's not going to happen always fast. The price delivery is not going to be always fast. But usually when we took a meaningful pool of liquidity, you will see the price starting to move quite fast towards the next liquidity pool. And what did we do? Look here, we took New York low, and where did we offload it? Once again, where did we offload that liquidity? We came to this 4-hour gap and previous 4-hour high. Very simple. If you understand how the price moves, liquidity concepts are going to save you from staying into trades where you don't know where to put your entry, you don't know how big your stop should be. It was very clear for me. If price comes here, as you see, I did not even put it at this week's low. Structurally, this would have been the correct point. But because I was so sleepy and I was keep on falling asleep with these setups, because I literally traded half asleep the whole night. It was my nighttime, and here it was actually morning, but I was way too tired I was throughout the day after this kind of after trading like this throughout the night. Understand this: liquidity is gonna save your trading. If you master liquidity, you don't need anything else. You don't even need direction. I'm saying this, this is gonna be controversial. You don't even need direction if you understand liquidity, but liquidity paired with higher time frame bias makes you almost unstoppable if you understand this too. So, biggest mistake that I did today was staying away all night, trading outside my planned session, which was meant to be New York. I'm only meant to trade New York, and I've also taken a trade that was 4 lot size. I was not supposed to take that trade. My maximum lot size, as you've seen, it was written as 2, but it's actually 3 micros. Don't let the profit and loss achieved today convince you that breaking your process is actually okay. It isn't. I don't want to repeat days like this. It doesn't make me feel good knowing that I made money when I broke most of my rules, if not all of them. Why? Because my brain and my mind is gonna remember that it's okay to do that. And I don't want this to happen. It happened to me way too many times. This is how habits are being seeded in you. When you are being rewarded for something, if you remember when you were a kid and somebody was telling you, please, can you bring me that? And they were telling you, thank you, and perhaps giving you a candy. It works exactly the same way. Maybe it sounds primitive, but it's the same system when you reward a dog to bring you a straw, or you are throwing anything, a ball, and it brings it back to you. That's how your brain works. You reward it for an activity, it's just gonna reinforce that neural pathway and want to repeat that action. I should learn better. I should have known better. Protect the process first. Don't trade when it's my nighttime. I should use that for sleep. I was pretty much zombie throughout the whole day. I managed to recover in the second part of the day, but hey, this doesn't really matter. But breaking my process, number of contracts, and trading in sessions when I'm not supposed to trade, no. Anyways, that's it for today's review. I'd really like to know what you guys think. Let me know in the comments if you ever had a day when your results were really, really good, but deep down you knew that you have not respected and followed your process. I'm really curious to hear from you guys. If this happened to you, I'm sure a lot of the traders are contending with this, struggling with this every day. Thanks for watching, and I will see you in the next trade review.